Okay, hello everyone. Sorry, a few minutes late. Typically we start at noon. I had to eat lunch. But yes, this is Stop Losing, Start Trading. This is the live trading show that we do here with the Panoptic team. I'm here with Rosalie, aka the Crypto Queen. We do these shows to discuss trades, discuss the market, but also kind of showcase how we think about options. Everything we say here is, of course, not financial advice, but feel free to use this for general purpose information. Or if you have any questions, we'll be happy to help you figure out how to navigate the world of options. Yeah, first of all, how are you doing today, Rosalie?
Good, good. Yeah, I'm doing good. I think yesterday there was some interesting tweets and some interesting price moves. I saw a tweet that said like when you break up, you have a messy breakup and you can't get over your ex. It seems there's some trouble with Elon Musk and Donald Trump,
Which
but I'm doing
which
good.
which side are you rooting for? If it's a choice yet you'd have to make.
I don't know. Um, I
It's a
don't
tough
want to.
choice. Again, I do drive a Tesla myself, so I definitely don't want to see the company suffer too much by their CEOs trying to kind of take over the political system. Yeah, Trump is another side of the story, but so
Interesting.
crazy. Yeah, it's like same thing with the the Win guy, the guy that was like leveraging up and lost like 100 millions. Even you go at the top, everyone is as I mean, well, don't take it as stupid as everyone at the bottom. It's like the whole stack is degens and or manchilds and or uh, the same way all the way down.
Yeah.
Turtles all the way down. Let's put it that way. Um, Yes. So that was interesting. That was definitely interesting. I didn't tweet yesterday. I didn't want to kind of have my own ideas be kind of drowned by the drama. People enjoyed, which is fine.
Yeah, my friend was like texting me. He was like, "No, I'm gonna get liquidated." He
Oh,
was very bullish, but I don't think he did.
and this is right. Yeah, we can. The title of this show is Bitcoin's V-shaped recovery. This is again the markets. They do what they do. Who sells Bitcoin? Who buys Bitcoin? Who knows? But the markets kind of have this extreme response to events. So maybe that time yesterday was when tweets starting firing off. So we see a steady decline, almost a straight line, and also a straight line up. And we're back to where we were. I guess maybe up 4%. But yes, people did get maybe liquidated, did get a more exposure. If you're short Bitcoin, I don't think many people are. They may have been able to time it, but it's definitely yeah, we're just getting so tired of these news event that peter out and do
It's
nothing.
interesting though, because usually Bitcoin doesn't seem to be reacting to many news, but I guess maybe this time it did.
Yeah, I think again, Bitcoin is pretty like a macro, like stock markets maybe do a similar thing. Definitely if ETH hasn't recovered as well, and this is again maybe also telling you about the status of Bitcoin. We're far off from the starting price 24 hours ago. Still going up a little bit, but there was this quite drastic drop, 3 or 4% over the day. It is what it is. Let's see. Let's have a look at a different set of coins. And Solana, yeah, everything is red except Bitcoin. That may be going back. Actually, yeah. So trading is definitely on the kind of all over the place. What we like to look at as well is the volatility of the different assets. So this is Ethereum's volatility index by our friends at Volmex. This is maybe let's try. Yeah, over the past month, we've seen some ups and downs for sure. The increase we see here is the increase in price was correlated with an increase in volatility. It's been stable. The Twitter antics decrease the volatility surprisingly. So there's always a different story with options with volatility, which is based on options trade, and the actual price, which is based on people dumping or longing, depending on the environment.
I wait, so price dropped, volatility went down. Shouldn't volatility go up if it's, I guess.
This is maybe also we had a very special and good research topic on Tuesday, where Nathan again from the research team, fantastic work. But yes, as you say, typically Volatility is a measure of fear. It's a measure of maybe people kind of wanting to exit the system, pulling out liquidity. When you have a big drop, this is when people are fearful. So yes, in equities, in S&P 500 indices, a little bit in Bitcoin as well, you have this pullback in price increases volatility, and that's the common way. ETH and Ethereum was different, and this is also what we might be seeing here because the volatility, this spike happened, I guess. Oh, maybe yeah, the spike may happen with the price going down as well. This I don't know when it's the Twitter. I don't know if it's UTC or not. No, yeah, this is all messed up. Sorry about that. Let's try to get to real time. I don't want to speak through my. So Twitter stuff started at noon, so it's slight move, but then it's actually started before. It seems a lot of what we see is that big price moves on the downside increase volatility. It's true for stocks, Bitcoin, equities. For commodities like oil or natural gas or gold to some extent, and Ethereum, it seems the relationship is a bit flipped, where you see risks or fear on the upside. Barrel of oil goes 3x. This is not good for anyone. No one is kind of speculating on holding barrels and selling them high. It's like now it's more expensive for everyone. Same thing with commodities. Could be like agricultural product. No one wants to pay more for their corn or wheat and whatnot. So this is what happens with commodities, and ETH is also a little bit like that. There is a for some reason a better analogy between ETH and commodities than ETH and say the stock market, which is that tells you about maybe also ETH is used if the price spikes, transactions get more expensive. It's actually a bigger expense in terms of if people trade on chain. So you have this maybe reactive. It's a I'd say it's a sign of maturity because ETH has some use cases that are not just pure speculative. If the price of Cardano goes up, no one has to pay for transaction fees because no one transacts. So you don't have as much of a fear, I guess, if the price of altcoins goes up.
Okay. Yeah, that makes sense.
Yeah, we haven't been we're doing the intern trading is doing on Eat Mainnet. So it is a sizable fraction sometimes of their trades. And then the Panoptic team, I guess, subsidizes this. But this is something that a lot of people have to worry about. Layer 2's base unit chain is a different story. So you don't have to worry about gas as much. And whether it spikes from 0.001 cent to 0.002 cents, you don't care. So you have kind of this maybe two different ways of trading that you see on base, which would be maybe more rapid, more active. On mainnet would be longer dated, a bit less daily options, for instance.
Do you know what the average gas fee is for Panoptic's transactions usually?
Oh, yeah. See, depend on the price. So a lot of what we can do is look at the amount of gas that's been kind of consumed. And actually, one thing I'll share this is the gas price as well. So Gwei Station is a very good website. Price moves now we're about over the past maybe day. The average, this is when maybe a lot of the insanity happens. But yeah, the average is kind of low. 3, 4, 2, sometimes 1 Gwei is common. We see some spikes currently. It's S5, maybe on the upper like scale. So the type of gas that you have to pay, if you have one option open or more, then you have to do a little bit more computations to look at your collateral requirement. So the one, if you trade your first trade, it's probably like 500,000 gas, which is in line with what you have in Uniswap LP positions. You create an LP position, you are depositing funds. Panoptic does the same thing. So 500K gas is about the floor. When you have one position, first one you open, single leg. As you add more positions on my portfolio as well, I have like maybe 15. You have to do some churning and can go as high as 1.5 million. I've seen it. Sometimes you may have to force decide someone adds another like 400K. So the cost is between, I'd say, $1 and $5 if you're a small account. If you're a bigger account that has multiple positions between 3 and 10, if there's a spike, I actually personally don't even want to trade. So if it goes above, maybe not 5, but above 7 or 8, I actually am extremely yeah, I don't want to trade. If it's below, then I wait even overnight sometimes. So yeah, at the end of the day, a little bit more expensive. Maybe $10 for the average 5 GUI. $5 type of way, $10 is kind of what you can expect. Base is fractions of a cent, so it's not as much of a problem.
Yeah, that makes sense. I remember in 2021, it was outrageous. I would get up in the middle of the night as well to like try
Oh
to
yeah.
see if it was lower, yeah, to do
So I
something.
think the I mean structurally it was also not easy to game it. It was definitely like a weird system because some folks could bet a high amount and it would shift it. So yeah, before 559, the way that now auctions are kind of settled at a fixed price as opposed to kind of first the most player gets there. You see these decays. It does spike, but it goes back down quite rapidly. As you said, 2021, 2022, it was stay on for like weeks and months. I kind of remember having to close LP positions and paid like $50,
Yeah.
$60. Oh my god. And it eats into your P&L, and it's something that you have to take into account. But yeah, it's definitely. I'm happy people I'm happy that Ethereum's layer one is scaling where there's more gas, but also more efficient trading. Shorter block times is okay, but it's still going to be uh, what you want to see is lower GUI, lower gas fees, at least for a protocol like Panoptics, because you don't care about 4 seconds, 10 seconds, even 4 minutes is not going to change how much money you make if you catch the move too late. But it's only what, yeah, the cheapness of each transaction is very important. All right, so let's go back to the Volmax index. There's Bitcoin as well, which I think always tells a different story. This is interesting. Uh, this is the past 20, not even like the past few hours. Whatever happened to the tweet, nothing changed it. People were not worried, so there's not a lot of move. There might be a small change from 44 to 45, but it's still going down. So I would say that the story that maybe the Bitcoin volatility tells us is that people don't take this seriously, even though people sold off. Maybe that's normal and people can sell and buy. But the key point is that are market makers pulling off liquidity? Are they making it more difficult to trade? Are they kind of instead of having 10 million in the book, do they put 5 million or 1 million? That would change the volatility. So it seems like the volatility was not affected as much, steady decline. So people maybe on the smart side of the trade are not paying too much attention with the drama. At least for Bitcoin, which I think has a much larger options use case, a lot more trading. Deribit, of course, but also the IBIT option. So it is a little bit more like, yeah, a little bit more protected against these shenanigans.
Yeah, Bitcoin is here to stay. I don't think we'll see any big moves there anytime soon.
Actually, yeah, speaking of which, let's look at the intern's portfolio because I think intern has a position in Bitcoin.
Mm-hmm.
There's always the ratio BTC ETH, but also BTC USDC. Do you want to look at losing $1.8? You want to look at this one?
Yeah, yeah.
So this is on the interface. Overall, we're up again. I think the price of ETH, this is yeah, is going up, which is good. But the most all holdings are in either Bitcoin or ETH. So this is going up. This is one position, a short put that was sold last week on BTC, and yeah, this is it. Let's walk us through. Tell us what we should do about this position.
Yeah, I mean, when did we open it? 8 days ago. I think we can definitely leave it on. I think Bitcoin is going to go up over the weekend since it's already on its way to recovery, and we're still in range. Yeah, maybe we can catch that upward slope and close it on Monday.
Yeah, and even though we're losing a little bit, we're not far from the starting price, which is another signal to look at, and also pretty far from the edges of that position.
Yeah.
Yeah, I agree with you. There's nothing wrong with this trade, so we should just wait. Even though it's a bit negative, it's not systemic. It's very, very close. And we're earning premium. Remember, every time you keep a trade on, you're earning premium. There's one, yeah, sneak peek. I don't know if you noticed, there's a new button here.
Yes, yes, I saw.
Okay, so this is, I think it works. Hopefully, it's not gonna crash. But this is, we're working well a lot to kind of amplify the experience of traders, but also LPs. So again, you don't see this in Uniswap, where you cannot see the price going up. But we do it on Panoptic. So what we have implemented is the same chart, and now yeah, it's basically the same, but you earn the same way. This is not multiplier, but we can now compare the fees on Uniswap and the fees on Panoptic and see the difference. And again, it seems to be a bit off, but it's because the netting happens when there's a trade on Uniswap, but it happens when there's a an options trade on Panoptic. So they might be off a little bit, but it's essentially the same. But yeah, we can see the same rate. So it would certainly be the same slope and the same shape, but the slope might be different between Uniswap and Panoptic. So
Very
that's
cool. Yeah, I would love to see for Juicy Multiplier what that might look like.
yeah.
Different.
Actually, yeah, let's do some on-chain sleuthing. So this is BTC USDC. There might not be a lot of activity. Let's look. We can go on, so we can spy on people, which is what I like to do on chain. But now we can do it on Panoptic very easily. Is there one? Yeah. Oh, not a lot of buying activity, and this is pretty much nothing. So no, I think. Oh, sorry. Yeah.
Maybe on ETH.
Yeah. Exactly. So going back, let's go back to the interns portfolio. And we'll see. We had a losing trade on ETH, but otherwise, the two that are still on are pretty profitable, making $64 total. One of them is a put, one of them is a call spread. Uh, do you want to look at one in particular?
Yeah, I'd like to check out the call spread.
Yeah. So call spreads in this one, the way that we constructed it was that we buy liquidity, we remove some liquidity from Uniswap and move it closer to the range. And in that case, we also concentrated that liquidity. So it's not a call spread per se. It's if we were to do this on an options brokerage firm, it would be a calendar or a diagonal spread. But then for all intents and purposes, this is the payoff that we have. But yeah, we're buying a wide one, selling a narrow one, making a bit of money. But yeah, there's an interesting story that happened with the fees, I think. But yeah.
Oh yeah, yeah. That was interesting. I'm glad it's recovering a little bit. I know this option looked pretty bad last time we checked.
Yeah. So can you maybe explain why do we see this weird? So this is normally the premium that you accumulate. You hope to see it go up over time. Now there seems to be a reversal. Yeah. Can you maybe remind us what happened there, you think?
Yeah. So since we were buying an option, whoever was selling us that option had removed some liquidity from that strike price. So our multiplier went up. And so yeah, we started paying much more than we did previously.
Yeah. So and exactly. So that we can see at this strike, there is some amount of liquidity. I mean, maybe I don't know if that person added more, but yes, people sell options. You can sell as much as you want. You get paid even if no one is buying. So this is kind of first step. Someone sells an option, 3.895 ETH worth of call options. You came in and bought 1.5 ETH out of that. And previously, for a while, the 1.5 ETH was the majority of the liquidity. So that multiplier is currently 1.16. So you're effectively paying 16% more than the fees. But it's fine because you are concentrating liquidity, and this liquidity now is getting more fees per trade than your net positive 0.239, 0.235. But yes, the one thing to keep in mind is that if you buy an option, what you pay at the beginning is the multiplier. But as the other traders trade, as other people come in, they might be changing the conditions. So you have to keep it in mind that you have to check your options when you buy options to see if that spike, and it definitely spiked to 3x, which was very, very unfortunate, but it did make us lose part of what we earned. Now we're back into the positive accrual rate. But yeah, so this trade is a lot directional. So again, I don't know if the price is going to go down. You could imagine if it touched 2,400, so that would be where we could have closed it, but that's fine. But yeah, as long as we're in range between 2,300 and 2,900, we earn fees, and as long as no one else is buying that other option, we'll be kind of net positive.
Yeah, I don't know if we should leave this trade on much longer. I don't know. I feel like it might be, yeah,
Yeah, I mean we're
halfway through.
halfway through, but then we do have some profits, which is great because the price went down from the time we minted it. And I agree, might as well secure a profit now and be happy with it. Then wait, I don't know if it's gonna go down. It did go down over yesterday, so today would have been a big loser because it went down. Yeah, maybe it's a good time to actually capitalize on that.
Yeah, I think so too. I feel like if you're directional, it's very short dated, right? And so it's bad to like kind of keep trying to milk it, I feel like.
Definitely, yeah, and this is exactly right. The milking part, harvesting volatility, works a bit better when it's neutral because there's room. Like you can be forgiven if it moves either way. You can still make money. When it's directional, as you say, it can flip very very quickly, and typically these may be a shorter term. So it's true. Overall, I'd say that might be a kind of lucky trade to close early because despite everything, we were losing for a while, but because the price went down suddenly yesterday, when the profit, but I would say that the
Yeah, especially the way it looked on Wednesday was bad, and now it
yes.
looks okay, and we're profiting, so definitely don't want to go into the red zone again.
All right,
But
intern. If you stay away from the red zone, that might be a trade to close. There's always a delay. Hopefully, price will stay stable, but yeah, that's very important. So, if we close the losing call option, so it might be worthwhile to actually to open a new one. We're making money on the ratio. I think the actually let's have a look. We have a ratio trade. This one is a bit special because we purposely created it to maximize fee capture, and the ratio did go down. I think so. ETH price went down, Bitcoin recovered. So I can imagine that the ratio is still uh, Bitcoin outperformed. But yeah, this one is definitely working for us. The ratio went down, but this was a bearish straddle. So again, we're making money. So that's another one that worked pretty well in terms of movement and also in terms of fees. We're getting paid 6% more than the fees on Uniswap. Even though we're close to our max profit, I would say we can still keep it on. There's still a lot of juice to be extracted because there's buyers on the other side.
yeah,
And when you click, you can see the charts. There's none of the buying anywhere else. So this might be the only trade which is worthwhile to be on.
yeah.
Someone bought a straddle and a put. So might as well stay there. You're the biggest seller here, or intern's the biggest seller on that. 0.5. Another one can 0.3, but
Great. So we could pull we could reduce the size and make
it's a bit sneaky. Yeah, it's a fair play. What Rosalie is referring to is that we're currently multiplier is 1.1, 1.02. We can see who's buying on the other side, and overall, it's like pretty healthy. But what Rosalie is referring to is that since we own a bunch of liquidity, we could decrease the size and artificially pump the multiplier. And we can say from going from 1.1 to 1.2, 1.3. And because there's someone else who may not go above maybe 1.5, but that's another way to maximize. I mean, if I were to do this myself, I'd rather have a higher revenue at a lower multiplier than a still medium size, but at a higher multiplier.
Okay.
Because if you reduce your size, you had 0.5 ETH, you reduce to say 0.2, and then the multiplier is 1.6. Very, very juicy. But someone else can come in and sell, and then you lose out because you expect the market to respond. If there's only one person, and if it's one seller, multiple buyers, that works a bit better as well. But yeah, I would say that unless you really want to extract as much, it pays a bit more to play nice, because if you reduce, someone else can now prevent your profit. So either you complete or you want to reduce your size, and maybe you wanted to close all of it, but because there's other buyers, you close the most you can, and that's another way where you say I have, I don't know, 70%, 75% less risk because the position is 75 smaller, and I get paid more. That's fine. This one comes in, I can just close it fully. That's another way to see this.
Yeah, I think it's not time to close it yet, anyways, right? So we're still
Yeah, the
a little
ratio
bit.
is quite. It's, I don't know. It's been stable for a few months, so it's definitely a few weeks only on the downside. And you were right along the way a lot. Now a bit more stable. That huge candle on ETH is still kind of the only action this pair has seen that's bullish. But yes, I would say that this is also one of those that is pretty great. We're in range both legs. We have a slight bearish bias, and then it's been bearish since we minted. So yeah, this is actually pretty good.
Good.
All right, so maybe before we move on to the trading show, the best and worst trades, is there one market maybe that we have 5 markets, which may seem like a lot to users, but it's just kind of small positions in each one. You want to diversify your risk, diversify your markets, but also the strategies. We have ETH, USDC, BTC ETH, and BTC USDC. All of those have some room to expand, I'd say, to add one position. So is there one market that you think has either a mispriced, yeah, any bullish, bearish, neutral assumption on any market that you want to express with an option now?
Yeah, maybe either Bitcoin USDC or ETH USDC, but
Yeah, both of them have 26% and 20% utilized, which is kind of great. Lots of room to play. Yeah. Want to do Bitcoin or this
that's
one?
Bitcoin.
Okay. So we have one put. We have to keep this in mind. We have one short put, which is bullish. This one is I think, is it a weekly option? I don't know. Okay. So we have one option. Now we have room for a second one. Given the price action over the past few days and weeks, are you bullish, bearish, neutral on BTC?
Bullish.
Okay. Very bullish.
Mm,
Neutral to bullish.
neutral to bullish, but more bullish than neutral for sure.
And then and again, the direction is great. And maybe another question: do you have a price in mind, or do you have a target for next week or month or year even that you want to express?
Yeah, I think it's going to go back up to 110, maybe 109 over the next week or month.
Yeah, let's do a weekly. Weekly are a bit more interesting. And one way to express directionality is puts are bullish because they have kind of this positive slope. And if you say 110, you can choose the strike of that option to be about 110, or you can be a bit lower as well if you say it might be 110 but not more than 115. So that is another trade that we could do, which is capitalizing on the price going up. The sweet spot is at this maybe 110 target because you'll get to that flat part but still earn fees, and that would be kind of a certainly a fine trade to have on. Do you think that target could be wrong where it could go way above that, or you're fairly confident that within a week we're never going to see 120K, for instance?
Yeah, I'm fairly confident in the range over a week.
Okay, so yeah, so this is a weekly, so we have to think like, of course, we all wish Bitcoin to go to 200K, but next week, if we have a target, there's another thing we can do is to add a call option as well, either at the same strike or slightly offset. But the goal of that extra call option is that it still is a bullish because the slope is positive. It still has a price target around 110. And maybe if you're wrong, it loses. But the key point is that if you're right, more generally, one put option is earning some fees. If you add an extra leg, which is a call option, you earn twice the fees. You have twice as much liquidity for the same requirement. And if you're like a little bit more harvesting fees as your main target, that's also another very good trade to have, where you just don't. It's not just the price movement, but also some level of volatility harvesting.
Yeah, I think this looks very good.
Okay, and then we if we click, we can see the other people's liquidity. No one is buying, so it's fine. But there's not much more fine tuning we need to do because these strikes aren't bought. There's no extra multiplier, so we can choose and we're free to do what we want. So it does this yeah. So this option trade looks good for you to you.
Yes, it does. Yeah.
All right, so let's paste this in the chat of YouTube. Intern can actually see it, and people also listening can also try to replicate that exact same trade. If you're from the US, you just can have a look at it and maybe take a picture. But otherwise, this is the trade that we want to create. So, all right, intern. All right, up to you to execute those trades, close that profitable call spread, and also create this. It's a I guess I don't know if it's a in the money straddle, let's say.
Speaking of screenshots, it's a funny meme as well where it's like, did you sell at the top? Like, no, I took a screenshot. I had lots of really lovely screenshots that are no longer
I mean,
accurate.
you know the saying, when you take a screenshot, that's the top. When you're so happy and you want to like memorialize that moment,
Sell instead. Stop
yes.
taking screenshots.
Take show the P&L number, less charty but more concrete. So this is good. So this is options hour. We try to go over trades, discuss how we think about a trade, we engineer the trade this way. Now we have the weekly Friday event. It is looking at the best and worst trades or traders, and then we have the competition going on base and also mainnet. So maybe Rosie, you'll take this one off, right? So
Yeah. So Brandon is sick, so his voice isn't good enough to live stream. But yeah, we are going to be analyzing the best and worst trades on ETH USDC on base and CB BTC USDC on base from our competition. So these are from the past week. And we can start with the worst trade. Before I open it and share my screen, Guillaume, what do you guess? I know Brandon likes to play.
I know, and again, it's I'm probably a coin flip away from like being 50-50 because it's hard to judge when you look at the market and there's a huge move. Then it's a bit easier to predict. But the past week was also kind of so. There is some interesting patterns, meaning that we had a drop yesterday, some price action, but now like there's two ways to make money and two ways to lose money. So we're venturing too much. I would say that the biggest loser was probably selling a call option, and the price went down quite suddenly, and then maybe people did panic when there's a big we these options have to be closed as well, so or at least open, but then if someone closes it, then it's sealing the execution. So yes, that might be it. And the biggest winner, I would say, was probably I don't know, actually. Let's go through it now. I see one where I'm wrong, but
yeah, you were correct on selling a put here. So this is the worst trade so far on ETH USDC. We are this person is losing 4.55%, which is $21 in USDC. They are earning some Streamia, but not enough kind of to offset. But yeah, walk us through. Is there something interesting about?
Yeah, exactly. So this is a put option is bullish, and then that person got caught. They opened it at the top. As of today, the price went down. So this is understandable. So I wouldn't be worried. It's not testing the range, but it's just kind of unfortunate. One thing that I have to kind of maybe point out is that if you look at the trade, it was set up at a pretty high delta. So what I mean by that is that it's offset from the center. The price at mint, which is that thin line, is close to the lower limit. And the price went down. It's now 81 delta, meaning that each $1 move leads to 81 cents of loss. So it is a quite aggressive bullish trade when it was minted. And unfortunately, it moved. And that's why maybe it's worse than another trade, which was probably at the money or lower delta. Normally, I create puts at 30, 25, 20 delta. The same put option at the 20 delta would be losing 1% as opposed to 5%. So that's maybe the one reason why this one has been kind of the one that's lost the most, because it's started at high delta, and then now if it still moves a little bit more, it did maybe touch 2400, they were holding ETH 100% delta. This is also kind of quite dangerous. So yeah, I would say that's one thing about minting an option that high of a delta, maybe make you more subject to these kind of wild moves.
Interesting. Yeah. Yeah. So let's look at the best trade instead. Next, I'm going to pull that up. Do you have any guesses you want to put in?
Yeah, I think earlier I said sell a call, and then I was wrong. So I say sell a call again for the best trade, given that it did move quite a bit over the past day. So let's do that. Oh no, wait. Yeah, sell a call. Let's do it. This is my final answer.
Alrighty. So the best trade is a long put. So
Oh, okay. Yeah, I have to enable. Sorry. Long put. Another bearish trade, differently, but yes.
yeah, so here this person has 27% profit, which is 16 USDC here. They are paying a little bit in Streamia, but not too much. And yes, they capitalized off the price move.
This is interesting. So this is a put option. It was minted out of range, meaning that liquidity was just sitting there. So they paid nothing for a while.
Yeah.
And then the price went up. This is 6 days ago. Price went up, went down again, and now they're also paying nothing. They were able to close that position at a profit, which is great. But yes, the other side, that seller probably has some liquidity out of range. Price did go down. It was high, yeah, pretty high strike as well. So I would be buying these puts as well if you want to get a free short perp, no funding or no nothing. You can do these trades, and that one worked quite well. And I think they probably have closed it. Let's see the closing price near the bottom. 24.33 was probably the bottom, like very very close to the bottom over the first last day. So congrats, great trader.
Yeah, they lucked out on almost a free option there. That's very.
And $1 out of 16. I mean, small potatoes, I guess, because it was also a very short trade. So yeah, amazing.
Good. So congratulations to whoever this was. Now that we went through,
yes, yeah. The ETH USDC, we had a competition last week, so this is not competition. So people maybe are, yeah, it's fine. They don't have as much desire to win. So we will go to CBBTC, which now is part of competition. We expect to see a lot more activity, great prizes, of course, but now probably more risk taking. So I could expect that the biggest winners and losers also maybe on the more aggressive side, long shot, but then they work well for them.
Yeah. So for the worst trade on CBBTC, what is your guess?
So we had this weird V-shaped recovery. So unless someone did close it last night, they should be kind of fine. Sometimes it pays to be patient and then kind of look through the noise. But yes, actually, since this is so the price was flat the whole week, one dip yesterday. So I think someone had sold a put, price went down, similar to the other one, I'd say. Put option that was closed at the worst possible time. This is the biggest loser.
All right. Well, this is
I know. I think I know. No, wait. Go ahead. Sorry.
Yeah, this is a long call. So this person, is losing about 28%, but it's only 2 USDC at the moment, so not too bad. But yes, it looks like they are close to getting in the green zone here, so, anyways. But
the strike was 110,000, and it was opened about that price too. So that was a bullish trade for sure. In the price in 15 days ago, so I think the price went down. So I would imagine that this is kind of the reason why they lose. But maybe this is a weekly options as well, and then they've held it for 2 weeks. And I'm sure that throughout that 2-week period, there was probably a point where they were maybe not losing as much, or at least the outcome might have been different. So it's also another warning. If you trade weekly options or daily options or even monthly, you have to kind of maybe be ready to harvest or close your positions when that timeline happens, because this is a short-term bet. The timescale tells you within a week. If it doesn't work, then you should maybe revisit or redeploy. But then keeping it means that you're stuck in that. So one thing also that is, it might be difficult to think about. Oh, I want to close it. I want to kind of keep it on. So people should not be attached to their trade. That's the first thing. And second thing is that a lot of trading brokerage trading platforms, could be Robinhood or could be kind of anyone. When you trade options, typically there's a fee when you open a position, a commission, and also when you close it. And that is kind of a bad maybe incentive, because you say, no, I don't want to close it. I want to pay that fee. I want to let it expire. So what we do at Panoptic is also you pay upfront and that's it. You can close at any time. There's less of a mental block for that. And yeah, I would say it's $2. This person probably tried to get the biggest percent P&L without making money. But given that this is a weekly option, there shouldn't be any reason not to close it and redeploy, or at least change the strike. Or they're paying 1.932, which is huge. They probably could find another strike slightly different, slightly off, that has a much lower multiplier too.
Yes, for sure. Time to close this. It's not too bad.
0 and 3. Yeah, so it's 30% in 2 weeks. The most you can lose is 100%, I guess. But yeah, not
We
quite.
we have another worst trade. This one was the worst trade by total losses. So
Ooh.
we will take a look at this one. This is also on CBBTC. Do you have a guess what this might be?
In total loss, yeah, I don't know. I would say it's probably not buying a call, because you need like a large volume. So selling a put again.
What I think is really interesting about this trade is that previously in our ETH trading competition, or usually sometimes when I try to check what is most profitable, I come around and I find perps all the time. People are,
Ooh, okay.
making a lot of money on perps, and we're kind of trying to, argue that options are better than perps because of risk management and lots of reasons.
Yeah.
But here we have what I like to show people more, because I like to be right, not wrong. And the worst trade here we see is a perp. And so, gotcha, options are better than perps. This person lost almost $70,
Ooh.
38%. Yeah, so it's a steep slope down.
Yeah, there's no forgiveness. You're wrong, or I mean, you're right or wrong, but where you're wrong, every time the price move, you're wrong a lot more. And yeah, so the setup is that you buy a put options. This is bearish on its own. Normally, buying a put will be low risk. If the price goes up and you're wrong, it's only making money when it decreases. But you sell a call to make this symmetrical. It's going down all the way. The one advantage, I'd say, the one reason why you might want to do the perp instead of the put option is because it's light gray, but the net spread that you see here is negative, so they pay, but it's 0.095x. And if they did not have this short call to fund this, they would be paying 1.2. So 12 times is 10 times more, let's say, round number. It's a bit weird, but the perp, because it has a long and a short, because it's like lots of risk on both sides, you pay 1/10 of the cost, 1/10 the funding rate, than just a put option. And yes, they're paying, but it's actually quite negligible. They lost due to the price move, but not due to the fees. And again, whereas if they had a put, their losses could have been half as much, but then they would have paid 10 times one fees. It would still be maybe $1 instead of 20 cents. But this is the trade-off. I would not say this is a bad trade, because in terms of perp funding rate regime, this is almost nothing. 0.09x, it could be like 5% per year in a weird way. So that's maybe the only reason I would advocate for trading perps. If you're used to perps and you're happy with the quite symmetrical risk, now you have a juicy premium. I don't know what the funding rate is, say on Hyperliquid, but that one is its own funding rate. If you construct a trade, you could even have a positive. This is negative, but you could have a positive funding rate for shorts. Now it's negative for shorts as well, so it's a different way. But that would be maybe the main reason. Shorting on Panoptic gives you a tiny funding rate. Shorting on Hyperliquid or even longing could be much higher, and buying a puts would be 10 times higher, which is a weird. So the cost of protection is 10x the fees again. Quite
Interesting.
interestingly, yeah.
Interesting. Yeah, I think on Wednesday we also covered risk reversal. So there are different ways to kind of create these what still kind of appear like perps, but are more mitigated. Right?
Yeah, exactly. No, I like that. Again, this is if you're bearish and the price goes up, there's nothing you can do. But at least they could yeah, they could console themselves and saying that they lost due to price action, not fees, which is fine.
All right, and now we have the best trade for our trading competition on BTC USDC on base. What do you think that
But
might
yeah, I'm
be?
pretty 0 in 5. So the best trade because this one had a short position, so even the short lost because the price reverted. So maybe let's do a very left field type of guess. This is a straddle that was in range the whole time. Let's say.
You're doing really bad today. Is that
Okay.
because of me? Um, this is the best trade. It's interesting. It's a long put. It's but three
Okay.
long put. I have a guess who this user might be since I've seen one user do funky trades with up to 5 legs. I don't know if you're listening. But yeah, so this is the best trade so far, 5%, 5.9, so almost 6%, paying a little bit of Streamia for that. But yeah.
This is what why do you think having 3 legs instead of one is an advantage?
Um, because you might get free options in the meantime, maybe.
Yeah, or maybe the it's all in range, so they all pay the same rate.
Oh,
But I would say that this is probably to
to
avoid having one large multiplier. You can think about this: if you have 3 strikes, you have a third of the capital. Remember, a third per strike, and then the effective multiplier could be 1.05 across all three. But if it was on the same strike, it could be 1.2. So it's actually we would expect this to be done as the market matures and there's a lot of both sidedness. And I'm sure if you click on the strike, there might be like similar amounts of liquidity everywhere. But yeah, I would say that might be the reason why that user tried to spread the risk. There might be not enough liquidity in one leg, but three side by side, basically the same payoff. Not much changing the shape of the curve, but then they reduce their funding rate or the cost quite drastically.
very interesting. People are figuring out good ways to reduce their funding rates. That's
Exactly. And then the funding rate over price, if you want, is like the volatility surface. So it's a weird it's not the same volatility surface you see at Deribit, but there is a price dependent volatility, and that type of trade tried to minimize maybe the impact of that one trade. So yeah, this is again the as more and more people trade, and you can imagine now you have to trade $1 million worth of puts. Now you can buy 6 legs and have a much better deal than just one leg piling in the same strike.
very interesting. I'm always learning so much new things every day on Panoptic. Yeah, our trading competition started on Monday, and we'll be running it for an entire month. So you guys still have lots of time to put in your trades. We have some really cool prizes that we'll be giving away at the end of the month. The competition runs till June 30th, and one person will get a very funny Michael Saylor pillow.
Body pillow.
Yes, it's huge. But yeah, that's it for the best and worst trades.
Yeah, and
Yeah.
actually, I forget. I'll share my screen for you, but yeah, we can look at the current standing. So
Mhm.
we're a few days into it. We do a monthly trading competition, so people have a little bit more chances to be right or wrong. We did not see huge price moves like we saw on ETH, so I would expect small minority would make money because they traded well. The vast majority, because it's like sideways, would see some losses. But yeah, I'd say that the bulk are maybe losing, but there's still a chance. And those that are consistently earning like 5%, 0.5% constantly, they can actually now kind of race to the top. So yeah, it's a little bit less active because the price didn't move. You have the volume as well, which is what people maybe again they want to optimize for that pillow. Oh my god, that will ship them. But there's also volume. Volume is also another way to kind of try out if you trade heavily and all active, but then ended up being middle of the pack, even losing a little bit, then we still want to reward you. So that's kind of why we have this volume category. But yes, top 20, some cash prizes. Of course, the first one gets pips and prizes. Come and trade as a the 24 days to go. Maybe the intern should also participate. We'll see. But yeah, that's a good market to be in. So
Definitely, the intern needs to open up that straddle.
all right. Okay, so I think that's it. So okay, let's stop sharing. This is great. Yeah, thanks, Rosalie, filling from Brandon for the best and worst trades, but also kind of learning a lot along the way. Again, I'm learning a lot too. Whenever I think about knowing the protocol, there's always something new that pops up. So this is very interesting, and then keeping us all on our toes. We're all just learning at this point. So very
Wonderful.
cool.
Yeah. Happy Friday, everybody, and thanks for tuning in.
Exactly.